Hey everybody, this is Jim at SP500chart.com. It is about 4:45 p.m. on October 28th, 2013. This is going to be a real short video because, frankly, nothing really changed. But, true to my word to try to do a video at the end of every session's close, I'm doing it. But before we take a look, I need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm also sober, because if I wasn't, I don't think I could read it that quickly. I am, however, just a guy who draws lines on charts. So let's take a quick look. Well, we have another day in which the S&P set a new all-time high by a grand total of a little bit more than 2 points. And this is really odd because we have been in, for the past 4 days, this little strange, narrow, no volatility to speak of, just this little melt up thing that's been going on since about 1740, the last time we tagged that. Now what happened is we'd been watching this blue line right here. We got above that line back on the 22nd, we pulled back on the 23rd, and then we just started this little melt up. And I have to be honest with you in letting you know this is a little troubling, just because of the fact that there does not seem to be much in the way of real ardent, is that the word I'm looking for? Real conviction in buyers. It's almost as if there's 1.01 buyers for every one seller. We're just creeping up. Now, what is a little interesting is the fact that we did get over this small possible neckline right here on what may be, well, what looks like an inverted head and shoulders pattern. Of course, coming where it is in the chart, this is not a bottom because we're at a top. Well, let me change that. It's not at a bottom because we're at all-time highs, okay? But sometimes you will see inverted head and shoulders patterns form as a consolidation and a continuation pattern. And we're over that neckline today, albeit by just about, from the high of the day, about 6 points. This pattern has a target of roughly 1775. So I think that's probably a decent thing to keep on the table, and that is to look for 1775 as a result of what took place over the past 5 days of trading, including today. But what's really peculiar is the fact that we've just been in this, like I said, just kind of hugging this line and this line, getting above this a little bit, then getting underneath it a little bit. It's just very, very different looking trading than what we have been seeing lately. We also, over the weekend, made one change on the chart that I'm going to make you aware of, and that is, I think we can establish that this is a good and reliable resistance line, because it's worked for 1, 2, 3 good solid touches. We don't have a super reliable resistance line, or support line, other than this red one and then these two little ones right here. But we mentioned all along that these were just going up at too steep of an angle to count on them for very long. And each of them failed after, well, this failed after 4 days, this failed after 3 days, this failed after 8 days. Or was it 9? About 9 days. Or was it 10? Well, it depends on when you start. But it failed. It's not a long-term channel. So with knowing what we know about the tendency of the markets to make parallel channels, I figured, what the heck, let's take this line right here and let's snap it. At first I had it right here, but after seeing this strange little action across that line, I basically moved it and said, let's start this back on the low of October 9th and see if we reach this line again, if we get a reactive move maybe that gives us a little bit more of a strong bounce upwards. Because I still think that that 1775, I don't think that's going to be the top. As a matter of fact, as we look at this chart, if we stay in this channel, there isn't any reason to expect resistance until we get up to about 1840, okay? That is out if we stay inside this channel. Now, we could power on up to this thing perhaps and then bounce back down to this bottom line, in which case this would be resistance here, but I'm talking about where you would expect the channel to die. So if we were to stay inside this channel for the next month and a half, maybe even maybe even close to 2 months, then I would expect 1840 to be resistance. But until then, there's nothing on this chart that I see that says we should get hung up at 1780. No, I don't see it. 1790. No, I don't see it. 1820. No, I don't see that until about 1840. So let's just see if this bottom line makes sense. Right now, I want you to know totally up front, this line is a guess. It is based only upon the fact that we see a lot of parallel channels in the S&P. And since I think this is a good line up here, I just created a copy of it and moved it down. Let's see if we tag that line in the next day or so, and if we do, if we rebound and mount an attack on 1800. And also keep in mind, if we break this line, then again, this line is still something of a guess. So it may not mean the end of the world. It may not mean that this trend is over. So this line is just a guess. I think it's an educated guess, but it is a guess. So right now, I would look at this this little neckline here at around 1760. I would look upon that as probably some support, not terrific support. I would look at this blue line as, what's a good way to put this, speculative support. I would look at this line as probably giving a little bit more support, because this is a broken trend line that had been serving as resistance, and we're now over that by close, not quite, by close to a technically significant amount. So guys, I think that's just going to be it for today, October 28th. Let's just keep an eye on it together, see if this channel ends up being what we're dealing with, and let's see, will the S&P head up for the mid-1800s? Wow, wouldn't that be interesting? So look guys, thanks for watching. Take care.